I'd like to now introduce our next speaker. And students are really the lifeblood of any university, so our future fintech leaders here as well. And I'm absolutely delighted to introduce Brianna Mahoney, who's going to take a few minutes to tell you about the MBA Fintech Club here at NYU. And she will also introduce our next speaker, Iseult Conlin. So Brianna, over to you.
Thank you, Kathleen. And thank you for inviting the Fintech Association to speak here today. So as Kathleen noted, I'm the president of the Stern Fintech Association for 2025-2026. We are one of many professional clubs at NYU Stern. They are all run and staffed entirely by student volunteers. So I myself am a current Stern student. We do all of the event organization, alumni outreach, marketing the club to students, etc. We have 140 plus active members and new students joining our organization every month. And our priority for the past year has been to host more events for the club. So far we've organized an off-campus trek to the Solana offices. We hosted a panel with Stern alumni who currently work in a variety of roles within fintech at companies like Visa, Robinhood, and Chime. And then we hosted a recent panel with fintech professionals this past February where we dived into the impact of AI on this industry and had a really interesting discussion there. And the goal of these events and the goal of our club is to give students at NYU Stern in the MBA programs a chance to learn more about this industry, more about the types of roles that are available, and get to speak with people who are currently in those roles and just network with industry professionals generally, since networking is obviously a key element to success in any form of career. And we're always looking for new speakers and new collaborators. So if you are interested in partnering with our club, organizing an event with the students, please feel free to reach out to us via our email, which is fta@stern.nyu.edu. So with that, thank you for the time. And I'm going to go ahead and introduce the next speaker, Iseult Conlin. So Iseult is a managing director, the head of U.S. institutional credit at Tradeweb Markets. In her current role, Conlin oversees strategy and implementation for credit products, building new trading protocols by collaborating with market participants to innovate, streamline, and advance electronic credit trading. Iseult joined Tradeweb in 2018 after almost 8 years at BlackRock, where she most recently served as an investment-grade bond trader. In that role, she spearheaded the firm's electronic credit trading efforts and market structure advisory, alongside trading a variety of investment-grade credit products. Iseult was named to Forbes's Finance 30 Under 30 list in 2016 and was recognized by Markets Media as a top fixed income trader in the publication's Women in Finance Awards in 2017. Iseult holds a BA from New York University in economics and psychology. Please give her a warm welcome.
Hello, and thank you so much for the intro. I'm really happy to be here. I am a proud NYU alum from way back in the day. I'm going to date myself. I went to the College of Arts and Science. I played basketball at NYU. I've lived in New York City now feels like my entire life, my entire career. So very happy to be here. So I'm going to chat. I'm sort of going to connect three dots here. I'm going to talk about what fixed income market structure really looks like, why it behaves so differently than equities, and how that structure has driven this path towards electronification and what that really means for clients and dealers in the broader market. And I'll talk about why I ended up joining Tradeweb and sort of how my background led to that. And my expertise very much is in market structure and sort of electronic market structure and fixed income, and we'll talk more about that. If you're coming from sort of an equities market mindset, fixed income can sort of feel like, why isn't there structure, or why isn't there an order book? Why isn't pricing always visible the way that equity markets are? And the short answer really is market structure. And the long answer is what we'll sort of talk about today in this quick chat. But sort of quick roadmap of what I'm going to talk about I'll start with a simple framing of what people picture when they hear electronic trading. Then I'll explain Tradeweb, what we do, and how we sit in that fixed income universe, and talk about the over-the-counter marketplace, which is a combination of people, network, and technology. And from there, we'll talk about the comparison between equities and fixed income, and close with somewhat more of a practical view of electronification rates, what asset classes in fixed income are highly electronic, what asset classes are not. But that's sort of the framework. So when most people hear electronic trading, they think of, these companies, and I'd argue these are fantastic, unbelievable companies, but they're more geared towards stock trading, the equity market, more geared towards digital currency or digital assets. And so this is sort of what most people picture, but they don't really picture Tradeweb or the fixed income ecosystem. This mental model is useful, but it's sort of incomplete, because in fixed income, the thing you're trading often isn't a standardized ticker with constant turnover. So for example, if you wanted to trade, IBM, and you wanted to trade that from a stock perspective in the equity market, there's really one common stock that you can trade. Whereas in the fixed income market, there's a lot of different cash and derivative structures that you can trade with IBM. And so it's more fragmented. It's more over the counter. It's not as seamless as just going into kind of your Robinhood account and wanting to trade that. So in fixed income, the thing you're often trading isn't one standardized ticker. It's frequently one of, potentially thousands of instruments, many of which are trading more episodically. So the mechanics of price discovery and execution have to adapt. So thinking about electronification as sort of one big order book is not really the right framing. Electronification in fixed income is more around the digitization of the entire trade life cycle, not just execution. So that could be pre-trade price discovery and quoting. It could be execution workflows. It could be post-trade processing. It's that entire life cycle. And one more important point is, in fixed income, electronic trading often means electronically enabled relationship liquidity. And I think that part about relationship is important. It's not necessarily anonymous or centralized or exchange style. So the question kind of becomes in fixed income is sort of, how do we build electronic markets that reflect what fixed income really is, which is heterogeneous, relationship-based, very protocol-driven, very workflow-driven. And that's kind of where a marketplace like Tradeweb fits in. And we operate in this sort of over-the-counter marketplace. Doesn't have the same guardrails that the equity markets have, but we bring structure, workflow, efficiency to the fixed income marketplaces. And I'll talk a little bit about that. So Tradeweb, as I said, Tradeweb operates in this over-the-counter marketplace. And I kind of view it as three pillars here, sort of people, network, and technology. So in over-the-counter markets, relationships and expertise really matter. Different clients have different objectives. There's asset managers, there's banks, there's hedge funds, there's insurers, there's different official institutions, central banks, for example, and they don't all trade in the same way. On the dealer side, risk appetite, balance sheet, market conditions, they're constantly changing. And so human decision-making still matters very much in the fixed income marketplace, even in areas where the workflow is becoming more electronic. So people here doesn't necessarily mean manual trading. It means sort of market participants and the decision-making they bring, which is increasingly being supported by electronic workflows. A lot of those electronic workflows that we are innovating on and working very closely with our clients. The reason I think Tradeweb has been so successful in creating this, very large fixed income ecosystem revolves around the fact that we listen, right? We're not necessarily the ones saying we know how to do this in the right way. We're listening to our clients and our dealer partners, and they are explaining the workflows that they want. And we're sort of building infrastructure, solutions, software, and tools to help them do their job better. So OTC liquidity, over-the-counter liquidity, very network-based. The value of a marketplace grows as more participants connect because it improves the breadth of liquidity, the diversity of pricing streams, hit rates, response quality. In equities, you often go to a book or an order book. In fixed income, you go to the network, and that network determines your access to liquidity. Technology is what turns the network into repeatable, reliable execution. It's not just a screen, but it's workflow tooling, protocol logic, integration into different order management systems or EMSs, and then all the way to sort of post-trade and straight-through processing. Tradeweb is very much operating at significant levels of activity in tech, and you can see on this slide we are facilitating 2.6 trillion in average daily volume. So think of like 2.6 trillion in volume going through a single sort of network and centralized market structure, and that is really what we're doing. And then growth framing. This slide sort of highlights some of the growth that we've had, and I think a lot of that comes down to market structure and how it is evolving. The one thing to note about fixed income is there's a lot more securities than in an equity market. So there's a slide at the end I'll show you of the 50 plus different products that we support electronic trading in, but there's a lot more types of structures, both cash structures, derivative structures that we deal in. So when we think about the fixed income marketplace, we're talking about interest rate swaps, government bonds, U.S. Treasuries, CDS and CDX and corporate bonds, including kind of fixed income ETFs and equities. We do all of that. So the Tradeweb connection. The connection is not only a client can reach a dealer. Connection also means the client can reach multiple dealers efficiently. Dealers can stream or respond in ways that reflect what their risk and inventory is, and protocols can be selected so that execution quality stays high across different protocols and trade sizes. So when we talk about connection, we really mean an ecosystem of liquidity access, and I think that's really the key part. You guys have heard from some people today and other people, but this network and sort of the scale that a network brings is so important to any company, and that's what we do within the fixed income ecosystem. Sometimes I would say people underestimate how important it is to get everyone in one place. So even if you make a really, really good product, the network effects for what you do is still probably the most core thing to the business. And so you can see on this slide kind of our client network, pools of liquidity, where we sit. We're in 85 different countries, 3,000 plus clients. We provide solutions across all different liquidity spectrums, institutional, wholesale, retail, and recently now corporate treasurers. So the other thing to mention too on this, which I kind of like this slide, just from a breadth perspective, is I don't necessarily think the fixed income ecosystem would have evolved or existed in the way that it does today without a firm like Tradeweb and sort of the infrastructure that we've created that allowed some of this, daily volume to be in the trillions of numbers. It wasn't like that 10 years ago. It wasn't like that 20 years ago. It has really changed the way that this market works. This may actually be potentially my favorite slide because I'm very interested in market structure, and it's something that just is like near and dear to my heart. And we sort of Brianna talked earlier on about how I came from BlackRock, and my first job out of NYU was a corporate bond trader at BlackRock. And when I first started on the desk, it was interesting. I was the generation that grew up with the iPhone. So I had technology. I texted all the time. I didn't really pick up the phone to call people. But when I started on the desk at BlackRock, I noticed that my superiors, when they wanted to do a large trade, and we're talking, 5 million size, 10 million size, they would pick up the phone, and it would take 5 to 10 minutes to negotiate with the liquidity provider on the other side, talk about pricing, get the right pricing, and do that trade. I found that fascinating at the time, but also maybe not as competitive or not as efficient as it possibly could be. And so I started to become really interested in market structure, in particular in the corporate bond world, which is what I do now, but also across the fixed income spectrum. So also across, treasury bonds, government bonds, interest rate swaps, and trying to understand why did it take 5 to 10 minutes to do one trade that seemed inefficient. I feel like we could do that in a more efficient way. And that's when I became very into electronification and why I eventually, joined Tradeweb sort of 10 years later. So, from in this slide, right, why fixed income is not equities, and I don't think it ever will be, but there are some similarities. Market structure really determines how an asset class can move from a voice-driven marketplace like what I described to a more electronic marketplace. So in equities, the dominant structure of how you get pricing, and there's regulation around how these models look, is central limit order book. So you typically have, in my fun AI image that I made yesterday in ChatGPT, you have visible bids and offers, you have continuous price discovery, you have standardized instruments, right? One ticker is the product. You have frequent prints that are very visible and you can see those. So they create sort of a strong reference price, and execution that often means matching interest in the order book. So if you're used to equities, it's very natural to assume, okay, put it on the screen, show the order book, and you're done. Even if you go on your phone, on Robinhood again as an example, because I like that company a lot, you can just sort of click to trade and you know where that price is going to be. Fixed income is fundamentally different. Liquidity is often relationship or network based. Instruments are more fragmented. I talked about this earlier with the IBM example. Many CUSIPs with varied liquidity. Price discovery often happens through what we call RFQ, which stands for request for quotes, which is a protocol. It's a workflow where you can ask in competition to a certain number of liquidity providers, show me your best price here. And so everyone's in competition with each other. It's interesting that RFQ as a protocol has really been the core of the fixed income market structure, just because it's over the counter. We don't have these central limit order books. The other thing to note about fixed income is liquidity can often be episodic. So the displayed depth, so like actually being able to see where things are pricing, is not always that visible. So execution often means choosing that right protocol and not just sort of matching up on a resting order. So I think the most important thing to take away from this slide is that the protocol matters, and our marketplace is very protocol driven and workflow driven, and that's what I spend a lot of my time on, figuring out the right workflows and protocols for an over-the-counter marketplace. So instead of sort of one universal mechanism, electronification happens by building multiple mechanisms well and sort of routing the right trade to the right mechanism. If you're trading a very liquid instrument, right, in small size, maybe like a streaming or a click-to-trade protocol, looks a little bit more like equities, maybe that makes sense. If you're trading a less liquid bond, or maybe something of larger size, the market is quite volatile as it has been in the last few days, maybe a competitive RFQ protocol or workflow will deliver you better outcomes. And for certain products, different structures emerge over time as participation sort of broadens and data improves. One good example of this is, the request for quote. You tell the marketplace, this is the CUSIP or the bond that you want to trade, and this is the direction. We also have another protocol called RFM, which stands for request for market. And that actually is saying, I want a two-way. I want both bids and offers for something. Here's the size, but I'm not necessarily going to tell you the direction. And so that was something that we pioneered in the marketplace. We took some of the education we have in the equity market. We actually use that in the fixed income market. And there's a lot of patterns and parallels to different securities and how they trade from a workflow perspective. And this is also another one of my favorite slides because it just goes to show you the differentiation or the lack of electronification, I should say, or fragmented nature of what trades electronically versus what does not trade electronically. And these are just some of the products that we support electronic trading in. And as I said sort of earlier on, there's so many more products in fixed income and sort of like financial structures in fixed income. There's also a lot of derivative products where you kind of have an unlimited amount. There's not like a set amount that you can do. There's an unlimited amount. Interest rate swaps is a really good example of that, where sort of average daily volumes and interest rate swaps continue to expand. But these are some of the products that we support. And you can see on the lighter blue is what we call voice. And when we say voice, we just mean voice driven, where exactly the example I gave before of when I was at BlackRock and a trader was picking up the phone, that's how those trades are still happening. So this is sort of the percentage of trades that are still happening in that fashion versus the percentage of trades that are happening in that dark blue, which is the more electronic or electronified way of trading. So this gives you a really good snapshot. And just for context of the people in this group, I focus primarily on corporate bonds, primarily U.S. corporate bonds. So that U.S. investment grade and U.S. high yield are the areas with which my business operates, and you can see the opportunities there that we have from an electronification standpoint. So I think the real sort of story here, or shift from voice to electronic, is the most interesting one. I sort of neglected to mention earlier on that when I joined Tradeweb, we were not a public company. We are now a public company, and facilitating truly like the entire ecosystem of fixed income, which many people don't pay that much attention to because it may not be the sexiest thing as the equity market, but we do really facilitate financial commerce, and are the sort of preeminent, or the dominant platform infrastructure that everyone comes to trade a variety of different products. Some of these on this screen. I think that's really all that I had for today. I know I'm a little under time because I like to always be under time, but thank you guys very much, and I appreciate you having me.
Yeah, thank you. Thank you. If you want to take a couple questions and you're open to that, we can open it up to the audience if you're all right with that. Cool. All right.
I love that. Sure.
We'll offer that up, and if we have some takers, we'll do that. Thank you for that. It was an amazing chat. And I think, for our audience, the electronification of bond markets and corporate bond markets in particular has been such a dramatic event over the last 10 or 15 years, has spawned massive changes in market structure, and also created, several multi-billion-dollar companies. So I think that's just an incredible, interesting outcome, and of course an exciting story for fintech. Because I'm sure the next 10 to 15 years will also see, the emergence of some huge companies as a result. But I was just wondering, maybe since you're an NYU grad, and of course we're very proud to have you here, maybe you could just say if there's one or two things that you thought were helpful or useful that you did in your university education that you felt were helpful to your career. You might want to pass along some wisdom there.
Yeah, no, of course. There's one thing that comes to mind is that, I didn't know what I wanted to do when I started off at NYU. And originally I thought I was going to be pre-med because I think because my mother wanted me to be a doctor. She said, we need to have a doctor in the family, so you have to be a doctor. So I started off in pre-med, and I didn't love the chem labs. I thought they were long. I just wasn't as interested. And I had taken an economics course my senior year in college, or my senior year in high school, I mean. And so what I did was I actually tried to take some classes at Stern. So we had a slightly different curriculum, but I was able to get into some of the sort of introductory finance courses at Stern. My absolute favorite class was a sort of finance 101. I forget exactly what it was called, but it was my absolute favorite class. I decided I wanted to take the CFA after that. So my one piece of advice on that would be try and take different levels of classes, or try and take different types of classes. It was a little bit of, I had to ask a few favors because I wasn't in the Stern school, but I'm a big proponent of being as curious as possible and leveraging NYU's breadth for everything, because you have access to whatever you want to do at NYU. But only a school like NYU could do that. So I really leveraged that to the best extent.
That's a great story. Thank you for sharing it. And now maybe a lightning round prediction. So one of the questions asked was, what do you think is going to happen as far as electronification of other asset classes? Like, can we automate, private credit?
It's a great question. And we're actually looking at that. And I know there's some people speaking on stablecoins today, prediction markets. Tradeweb actually just announced last week a partnership with Kalshi, which is a prediction market ecosystem, because we are really interested in expanding inorganically at our company. But we also know that there are opportunities for electronic trading in these areas that don't really look electronic. Private credit is a perfect example of that. We've been working with some partners in that area. I think that is a little bit of a data structure problem because the data can be more fragmented. There's a lot of companies, startup companies, that are actually looking at tokenizing some of that data. We find that really interesting. I think private credit looks like what maybe US Treasuries looked like 35 years ago, right? So I absolutely think that there's an opportunity there. We're very focused on it, but a lot needs to happen at the foundational level to get to the point where it can be traded electronically.
Real super interesting answer. Another really great question coming in is, you described sort of the whole food chain of how a trade happens. And the question has to do with which part of it is where you think the biggest source of value added is for maybe the trader or for you guys, data, algorithms, protocols, the platform, the network effects. If you want to maybe provide a little more detail or breakdown of that.
Yeah, I want to say all of it, but I lean towards the network effects and maybe some of the post-trade solutions as well. There's a lot around best execution and a lot around order management integration, making sure that happens as seamlessly as possible. Having the network effects and the idea of like the cold start problem that everyone talks about, that is just so impactful to the business. But you also have to have the right infrastructure. So it starts from the beginning of the trade, ends at kind of the end of the trade. And I think a lot of sort of solutions are one part and they don't do the whole trade life cycle. So unless you have all of that with the network effects, you're not going to be successful. We are a multi-asset platform. We support trading in 50 plus different fixed income products. There's no one who really looks like us. There are some people that specialize in maybe just corporate bonds or just US Treasuries. We are different in that sense. But I also think it allows us to create solutions that have patterns where if it works for U.S. Treasuries, maybe it works for U.S. corporate bonds, and that's exactly what we've done.
I think this has been a fantastic story, and you're interesting as a company and a fantastic career story as an individual, and also I think a takeaway of a case for how markets electronify. So thank you so much, Iseult. It's amazing to have you here. Really appreciate it.
Thanks so much.